Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Tuesday, August 17th, 2021. It's a down day right now. Looking at most of the indices down between 0.5% and 1% at this point. It pretty much started off a lot like yesterday did. So we will see if there's sort of the phantom unexplained rally at about 11:30. Yesterday's rally was really as though let's wait for the Europeans to go home. Let's buy the dip while the market's down. Let's wait for the Europeans to go home. Let's rally it at 11:30 when their markets close, and off we went. Now, the big story yesterday was that we doubled off the lows of just a year ago, last spring. That is incredibly fast, but quite honestly, the amount of stimulus that was thrown at this market was unprecedented as well. So we're talking about an unprecedented rally, or I guess the last rally was, in the wake of World War II. But also that, there was a wartime stimulus as well. So, it's only in the case of massive stimulus that we've seen this kind of thing. We really outpaced even the recovery that we saw in 2009 off those lows when there was a lot of stimulus, but nothing of the degree we have now. That was really when the playbook was being written for this kind of activity. As for today, it was interesting because we came in down $20 on the SPOOs. The retail sales numbers came out. They were very disappointing. Markets didn't like the Home Depot numbers, the Walmart numbers, and pretty much after those big retail sales numbers, we were still down 20. So do numbers matter? It's really unclear at this point. It's really unclear actually what matters at this point, and I think that's really the tell for going forward. We are so locked into this idea of every dip should be bought. Quite honestly, it's worked, so it's tough to scoff at something that works. But really, we've got the mentality that every dip should be bought, that all news is either good news or can be ignored because it's bad enough that it'll lead to something better in the future. And that's really the kind of mindset that we're in now. Can this last? Yeah, why not? Am I nervous that something feels a little, hinky? Yeah. Just something, it's almost like we're too complacent. Bonds go up, we rally because that's good for stimulus. Bonds sink because the economy's good. Well, that's good because the economy's good. We really get the sense that we're putting a spin on everything. I do think that we have to start thinking about what Jackson Hole conference next week means for the markets, or the September Fed meeting going forward. I think the Fed can't ignore the fact, which is something we brought up a while ago, and I'll continue to harp on, the fact that the reverse repo activity continues at record levels. And I've used the analogy before. It's as though the Fed is filling up the pool with liquidity, but now it's starting to overflow, so they have to run a sump pump at the other end to drain the liquidity before it spills over into unhealthy ways. I don't see that as being sustainable, and I can't imagine the Fed sees that as being sustainable. We can get away from the argument about whether inflation is transitory or permanent, and I can give you arguments on both sides. I'm going to say it's semi-transitory. Rents are higher, and since most people tend to lease on an annual basis, I will argue that is more than transitory, but not necessarily permanent, but leaning toward the permanent side because landlords don't really like to cut rents. They tend to raise them and work out other measures, free months, etc. So you never really see the rents go down too aggressively, except in a crisis like we did last time, and now they're bouncing back. And so there's a lot of things that argue against the transitory. There's a lot of things that argue against the Fed continuing to buy bonds at the rate that they're buying them. If you're spending the money on bonds to buy them, and then having to go to those bond buyers to absorb your excess liquidity via the reverse repo market, you're not doing anything. You're spinning your wheels. And I got to believe that the Fed understands that. As of now, again, we're taping this about 10:30 in the morning. So let's see in about an hour if the mysterious rally starts to resume. Remember, we are in an expiration week, so you do tend to get some kooky effects in terms of individual stocks and even indices, as that it does have an influence on trading, as you know, as we've explained in many cases before. So a lot to keep an eye on. It is still summer-based trading. Next week is really the fun, but there's no shortage of things moving around in the markets today, and let's see how that persists. Have a good one, everybody.